Here's one big thing I follow during each trading day: time frames. Knowing what happens in each of these important daily time frames can be the difference between getting in at the low and selling near the high. Here's what I observe every day. "9:30 a.m., the opening bell. The obvious time frame of importance. Again, the stock you bought could be at the very peak at 9:30 a.m. Intraday highs are set right at the open, and if you see a large fade, try to grab the profit ASAP if you have it. Typically, if it's 1% or 2% on margin, by 9:30 to 9:32 a.m., I grab it if I begin to see the slightest fade from the highs. 10 a.m. big guy buy time. If a stock you bought survived 9:30 to 9:59 a.m. and is right at the highs set in that frame, there's a good chance it'll sustain past 11 a.m. and into 1 p.m. Eastern Time. I'd say 60-40 if this occurs. The big guy buying time can occur at this time, and economic reports are released right at this time as well. It can get dramatic right at 10 a.m. 10:30 a.m. the Wave Genius sell time. If I've held from the previous day up to 10:30 a.m. and the stock is at the high, I would usually sell right at 10:30 a.m. and wait for a new setup. Why 10:30 a.m.? Stocks can survive a sell-off up to 10:30 a.m. max typically. The very peak occurs frequently at 10:30 a.m. and I usually like to sell right at this time. If it survived 9:30 to 10:30 a.m., I'm out. "1 to 2:30 p.m. the big guy sell time. I'm sure you already know about this time frame, but it seems like 7 times out of 10 the big guys start the big selling programs at this time. It could be because they went to go to lunch, have meetings, or whatever, but for some bizarre reason, it just seems to happen frequently. If I've held into 12:59 p.m., I'd sell right before 1 p.m. hits. If the market or stock you own can survive this time frame, you could be sitting pretty into 3:05 p.m. big guy decision time. This is when I usually buy. Not at 3 o'clock p.m., but 3:05. It just seemed to work in all the years I've been trading. 3 o'clock p.m., the big guys could unleash a fury on the market with major sell or buy programs. I usually wait until the last second, like I would on eBay when I'm bidding on something I want. I want the stock, but only if it closes at the highs in this time frame. 3:35 p.m. can also be very important these days because big bullish rallies have evaporated on that big dumb money guy with a lot of money lurking in the shadows. Keep in mind that this one period from 3:35 to 4 p.m. can provide the most volatile wave patterns in such a small time frame. I've seen 10 to 20 point S&P fades from this period, and placing strategic stops near 0.618 to contain your profit or minimize losses is key. Here's a biggie time frame to note: Fed meetings. Trading Fed meetings. I know people who only trade during Fed meetings and the rate announcement reaction. It could be highly profitable, yes, but if you're wrong, it could be dramatic. The move can be huge. What happens between 2:15 to 3:05 p.m. after the rate move is announced is pure insanity. The indices are very wild during this 50-minute period, and it's not a good idea to jump in during this specific time frame. My strategy is to wait until exactly 3:06 p.m. Eastern Time when the waves settle down. If the indices are trading at the highs, it would set up an upward wave 3 and then go long. But if at 3:06 p.m. Eastern Time is trading near the lows, I would avoid the market altogether. Typically, everything settles down by that time, but I feel more comfortable trading long side only. If a Fed meeting reaction is to the upside and it's off a third wave pattern break, it could potentially be a powerful and high percentage trade. Also, something big to note, it's knowing the seasonal monthly patterns every year. It's not an exact science, but strangely enough, it works very frequently. Here are the best and worst months to trade. Important seasonal time frame, October to April. The strongest time of the year starts in the middle of October and ends around April to May. It's been proven historically that the market outperforms the May to September timeframe. It's sell in May and go away.
We're gonna crash!
My worst trading months have been in the summer in the past decade, and my best trading months in the winter. Typically, a large percentage of my gains have come in October to December. Why? If the market is up for the year in October, there's an upward bias as a result of window dressing. The big funds want to show a great performance for at least that quarter and will buy the best stocks, typically tech leaders, to pump their portfolios and show their clients that they've been holding the leaders and the appearance that is for the entire year. The leaders can really move big time in this time period, and even buying dips can prove to be profitable. The best months of the year. The best time to trade if you're going to pick a couple months during the year is middle of October, November, and December. Again, the window dressing phenomenon helps boost stocks in this period if the market was up for the year heading into October. My huge Qualcomm trades in 1999, for example, were buoyed by the window dressing effect, and trading during this period can be almost mindless. There are times when you could simply wait until earnings come out in October and pick the best stocks with the best earnings during that month and hold until January of next year.